Hello, class, and welcome to Module 4. At the end of this week, you're going to be halfway through the course. If you've ever taken an 8-week class, then you realize that this goes by pretty quickly. So week 4, we're going to really be talking about, from a new material standpoint, internal controls and accounts receivable. Internal controls really deal with safeguarding your assets, making sure that your financial reports are correct. I will include a video that I think is pretty interesting. It's a YouTube video about a fraud that occurred in Dixon, Illinois. Dixon, Illinois is famous for two things. First is that Ronald Reagan was born there, or he grew up there. In fact, he was a lifeguard and saved about 150 people. The second reason that Dixon, Illinois is famous is that a city employee over 20 years basically embezzled about $50 million to a town that really didn't have $50 million. I think it's interesting, and it's a fairly short video. The only bad thing is that she was pardoned this year, even though she's already been out of jail, and she moved back to Dixon, Illinois. Doesn't seem to be the friendliest person in the world. Okay, so let's get started. We'll go to Module 4 Introduction. And here we're going to apply internal controls to cash and financial reporting to safeguard assets, ensure accurate reporting, apply methods of valuing accounts receivable and notes receivable to report at fair value, and accurately classify current assets. So this week, you should review the resources, which we're going to do. And then you have a couple of, actually three assignments. First, you're going to submit the module assignment on internal controls. We'll go over that, but basically it's just a paper that you'll write to talk about some of the internal controls that you would implement for a friend's company. You'll have another problem set as before. Again, if you spend the time and you check your answers, you should get a perfect grade on this. And then we're going to complete the comprehensive problem assignment, and we'll look at that one as well. Let's look at the resources that we have available. You've got a couple of videos. You've got the welcome video, which basically just says what I'm saying. You have this video on internal controls. It's about 16 minutes long. I would recommend it. And then we're going to go to accounts receivable. Accounts receivable is an asset account. It involves extending debt, very short-term debt, hopefully 30 days or less, to your clients. And depending upon how you determine what credit score you'll accept, you will have most likely bad debt. In other words, some customers just simply aren't going to pay you. And what we need to record on the balance sheet is what we think we're going to get paid. So the net realizable value. So if we have $1 million in receivables, but we know because of our history that we're really only going to collect 90% of that, then really what we've got is $90,000 of revenue, and we'll have to create an entry for a bad debt reserve. In some ways, it's kind of like accumulated depreciation. It's a contra asset account. You add them together, and you get what you think you're going to collect, the net realizable value. So there's a couple of videos that should help you if you read the book and aren't quite clear on some of these things. Speaking of the book, let's go there. You're going to be looking at chapter 7 and 8. Chapter 7 really is just a lot of terminology, a lot of like Sarbanes-Oxley, which came about after a number of different financial frauds that occurred in 2001, which basically destroyed a public accounting firm, Arthur Andersen, that had prior to this a sterling reputation. We can talk about some of the methods of internal accounting. So this will be good for your paper that is due. Not a lot of calculations there, so let's go to chapter 8 and we'll talk about receivables. Again, estimating uncollectibles. You have what's called a percent of sales method. And it's fairly simple. It just says, okay, what did I sell and what is my percentage that I want to set aside for bad debt? Both of these go into what's called a allowance for doubtful accounts. And the entry that you post to allowable for doubtful accounts also will determine what your bad debt is. In this case, our bad debt percentage on sales is 0.75%. And so all we do is multiply credit sales times the bad debt percent of credit sales, and we'll add that to our allowance for doubtful accounts. Now, what happens during the month is that you really actually will have bad debts that you simply aren't going to collect, and you'll finally write them off. And when you write them off under this method, it doesn't affect your bad debt then, but what it does do is it lowers your doubtful accounts. And if it lowers it too much, you'll end up with a debit balance in this account, and that is not good. So if your estimates of bad debt on sales percentage are wrong, you can end up with a problem. The other method of doing estimating bad debt, which is used more often, is the percentage of or analysis of the receivables. In this case, what you're going to look at is you're going to assign a bad debt percentage based on how long the bad debt or the receivable has existed. It's logical to think that you're going to collect more from items that are 1 to 30 days old. If you're getting into the 181 to 365 day category, that means that you extended credit 7 to 12 months ago. And if you haven't been paid in the first 6 months, what's the likelihood you're going to get paid now? You might. And this is very common in the medical field where we're dealing with insurance companies, and the amount that you're going to end up paying for medical services depends on what your insurance is. This is very common because sometimes it takes a long time to actually collect and to actually process these. And normally they go to the insurance company, and then they go to the patient. And by the time it gets to the patient may forget how much they really loved that doctor in that hospital when they cured their problem then, but now it's down the road and they want some money from you. So a lot of times people go, well, sorry, I don't have it. So this is the aging of receivables. In this case, it's a little more complicated. What you're trying to do is to determine the target amount. So in other words, you're trying to determine what you don't think you'll collect. So again, back to that example, if you have $100,000 in receivables and you only think you're going to collect 90,000, then you're going to have a receivables balance of 100,000, and you're going to have an allowance for doubtful accounts of 10,000. Again, this is a contra account, so it's a credit balance. You add those two together, it gets you your 90,000, and that is your net realizable value. So in this method, what we're trying to do is determine what that balance that we want in that allowance account is. And then we have to look at what the balance is at the end of the month before we make the adjustments. And we'll need to increase or decrease that based on that balance and the balance we want at the end. So you need to read up on this to have a better understanding of exactly how you calculate that. All right, so let's go back to module 4 and we'll look at your assignment. So your assignment, let's pull up the rubric. Internal controls are methods and strategies used to keep information and inventory safe from theft and to easily tell if something is compromised or missing. Here's the scenario and here's the prompt. Specifically, you must address the following rubric criteria. Role of internal controls. Explain the role of internal controls in business settings. Recommendations: recommend at least 2 internal controls that should be put in place to prevent inventory from going missing. And you'll be able to find that in the chapter. Financial statements: if you found that 2 $400 HD TVs were missing, explain what financial statements you would correct and how. Be specific as to the accounts and amounts, and then support your response with cited resources. So you would cite resources from the book most likely, or if you happen to look at something else. Make sure that you cover all of these 4 areas here. So that's one of your assignments. Let's go back to module 4. And then you'll have your problem set as normal, 50 points. If you take the time, you should have a perfect score there. And then we have the comprehensive problem. So I'm going to enter SNHU. Start assignment now. This is your comprehensive problem. So the following encompasses the elements learned in previous chapters. At the end of May, the following adjustment data was assembled. Analyze and use the data to complete parts 5 and 6. So your insurance expired during May is $275. So the first thing we're going to do is to look at, well, we basically have converted from an insurance prepaid to an insurance expense. So we're going to debit that, the insurance expense, for $275. And the credit would be, of course, prepaid insurance. And that's $275. And we can check our work. And we know that those are correct. And then we just move on down the line. And then, of course, on the second part is just simply going through the balance sheet again. And you can see over here, you'll have what's most likely. Well, again, we start with the assets. Cash is the most liquid assets. And then we're going to look at which of these are assets. This is on the asset, but on the asset side, but it's really not the next one. Accumulated depreciation should come after some type of asset that you're depreciating. So here we're going to go to accounts receivable, etc. Then we're going to go to supplies, on and on. And that will complete this part of it. And we'll just check our answers here. And so far, we're on the right track. So that really is what's due this week. You have this reminder here. As you work through your assignments, you're strongly encouraged to take your time on the comprehensive problem. This assignment provides feedback and very closely mirrors milestone 2, which is due next week in module 5. All right, so again, this is module 4. You have 3 different assignments that you'll have to do after reading the book, but you have, again, the resources, and I would recommend looking at the videos so that it reinforces the material that you've learned in the book. Have a good week.